Hi, grade 11s. We're just quickly going to have a look at the SOCI. So we have to do the SOCI for the financial year ending 29 Feb 2024. And it says that our profit markup is 50% on cost. So that is applied throughout unless stated otherwise in the individual adjustments. So we will always give you the pre-adjustment trial balance, meaning that this is everything that you have recorded throughout the year. And then by year end, you realize that you still included some expenses in the current year that was actually prepaid for the next financial year, or income that you haven't yet recorded, so accruals. So all of those matching items that you need to match to the year in which it actually incurred or the year in which you earned it, all of those need to now be still taken into account to get to your post-adjustment trial balance. That also includes your depreciation and then interest on loans and deposits. So this is your starting point. You want to start with the figures as per the pre-adjustment trial balance. Then we are going to apply the adjustments to get to our post-adjustment trial balance, which means that this is now the trial balance that we can use to then compile our financial statements. Right. So number one is you have sales with a question mark. And we're not going to freak out about the question mark. We know that the profit markup applied to get to the sales figure was 50%. So cost, remember, is always 100. That means that sales is 150% because sales is cost plus profit markup, and that was the 50%. Okay, right. Once again, sorry about this thing writing a bit strangely. But before we now just jump into, okay, the sales is 150 over 100, we need to just quickly go down to our adjustments just to confirm if we didn't maybe have sales at that have been included in the cost of sales already, so the stock sold, that we sold at a different markup. Because it could have happened that, yes, we sold goods with a cost price of 850,000 Rand, but some of it was sold at a discount of 20%, which means that the selling price isn't necessarily the 150%. So if we look at adjustment number one, it says that the following transaction has not yet been recorded. So in other words, not yet been recorded, not yet included in my 850,000. So that means it's fine. I can now work with my 850,000 because there was no trade discount on any of the items included in the sales for this cost of sales amount. So we will look at adjustment number one in a bit, starting with my sales. Okay, I have so many things open there. So we are going to say that sales, we're going to use our cost of sales amount, apply our profit markup to get to our selling price. And that then is 850,000 times 150 divided by 100. So 127,500. Remember to always show all your calculations. Otherwise, you won't get your marks if you make a mistake somewhere. There we have it. So we no longer have a question mark here. We are happy. Done. Then I've already added all of the pre-adjustment trial balance amounts to my, let me just remove this, to my SOCI. So, because remember I said that is your starting point. If you see amounts already in the SOCI, then it means that whatever you see on your pre-adjustment trial balance, you don't have to make any changes to those amounts. Those are the final amounts. Even if you do not agree, if you feel it has to change, no, just leave it as is, please. Then moving on, adjustment number one says that the following sales transaction has not yet been recorded. In other words, please record the sales transaction because it definitely occurred in the current financial year. It says that an invoice was issued to a debtor. In other words, I had more sales. This debtor now owes me more money. So I go to sales and I say I have to increase sales by 1 11,888. Then I'm going to go to my debtors control, and I'm going to add there that I've just added an invoice, a credit invoice of 11,888. Why I'm doing that now already is if I have to do the provision for bad debts adjustment, then it's not a back and forth situation of what is my debtors control balance now. Okay, I know that I cannot have sales without cost of sales. And this invoice was issued at 11,880 Rand after we allowed 10% trade discount. So remember that trade discount happens immediately when you issue that invoice, you issue it at the discounted amount. So that means that your 11,880 Rand represents 90% of the original selling price that you aimed to get from the customers. No one wanted to buy it at 100% of the selling price. So you said, okay, I will bring it down a bit. I will bring it down by 10%. Therefore, you can't calculate your cost of sales on the discounted amount because remember, we take the cost of sales and we then apply the profit markup, which is in this case, why is this thing lagging now? Which is in this case 50%. So we then applied 150 over 100 to get to our selling price. It is then at this point, after we have determined our selling price, that we realize no one wants to buy it at this amount. Therefore, we will apply a discount of 10%, so they only have to pay us 90% of the original selling price, and that is the invoice amount that you see here as 11,880. So you now first need to take this invoice amount and calculate the original selling price. So in other words, 100% of the selling price. So I'm going to take 11,880 times by, I want to know what was the original, what I want, divided by what am I working with? I'm working with the 90% of that selling price. So that is 11,880 times 100 divided by 90. You can follow on your own calculators, 13,200. So that was my original selling price, not the discounted price. And that is the selling price that I got after I applied the markup of 150% on cost. So I'm going to use my 3,200 and I'm going to say I need to add 13,200 times 100 divided by 150 because I need the cost of the goods that I sold for this transaction because I haven't recorded the transaction yet. And that is 8,800 that I'm adding onto cost of sales. So it's a normal debit, debtors control, credit, sales, debit your cost of sales expense, and then credit your trading stock. Once again, I'm doing this simultaneously, in other words, SAKI and SFP together, because I know I might also get a trading stock surplus, trading stock deficit adjustment that follows, and we never have enough time to finish our accounting papers. So we don't want to waste time by going back and forth. Right. Interest on fixed deposit is not capitalized. Remember, if something is interest is capitalized, it means that it's added onto the fixed deposit. So I'm going to debit my fixed deposit asset and I'm going to credit my interest on fixed deposit income account. But if it is not capitalized, I need to receive all of the interest that I've earned throughout the year. My entry changes. It's not debit fixed deposit, then it becomes debit bank and credit interest on fixed deposit, the income account, right? So you now already need to see that you either have an accrued income, so you haven't yet received your income, or you have income received in advance. You have already received the interest for next month or the month thereafter, okay? So they didn't give any further information, which means that you have to go look for your fixed deposit. There we have it, 8% per annum. They didn't note any changes to this fixed deposit. So that means you had the full 700,000 Rand fixed deposit for the year, and that earned interest at 8%. So 700,000, oh, frack. There we go. 700,000, weird zeros there, times 8%. And this was for the full financial year. And that then, let me just fix that. There we go. So 700,000 at 8% per annum. So 56,000 Rand is what you earned for the current financial year. So that means that you need to go to your nominal account section and see, what do I have here already? I'm on 12,000 Rand. So have I received and recorded all of my interest that I should have received? Clearly not. There's a 44,000 Rand that's missing there. So that means that I now have a new account, accrued income. So if you had to do your SFP, that would have been in your current assets. And then you have to go to your interest and you have to show I'm adding 44,000. Please add your calculation so that we can see how you got to that answer. It also assists teachers. If you make a mistake in your paper, then at least we know where to go and look for that mistake to help you to fix it. So 56,000 Rand. I'm just going to quickly pause this recording. I just quickly had to attend to something. Right. So that is interest not capitalized. Then included in the advertising is a payment of a 6-month campaign that started on the 1st of December. So you paid 6,600 Rand for a 6-month campaign. So first step, calculate the monthly amount. Oh, not 12 months, 6 months. Let me just quickly fix that. So 6 months. So you paid 1,100 Rand per month for this campaign. But the campaign only started on the 1st of December 2023. So your financial year ended 29 Feb 2024. So you paid for January, February, December, January, February, there, 3 months. So December, January, February. So the other 3 months to make up the 6-month campaign that you paid for is only in the next financial year. Therefore, you cannot include that expense in your current financial year because it isn't an expense that you're going to use now in the current year. So that is something that you have now paid for the next financial year. So you need to remove the expense from the current year and reclassify that as a prepaid expense, current asset in your SFP. So once again, I'm going to show my calculation there. There we go. So half of it was prepaid. Then we move on. The rental contract is signed on an annual basis on the 1st of October. The rent on the 1st of October 2022 was 8,000 Rand to increase by 12% annually. So in other words, every single year, your rent will increase on the 1st of October by 12%, starting with 8,000 Rand. So that means on the 1st, I'm just going to pause real quick. It's a bit noisy now. Okay, so if it was 8,000 Rand on the 1st of October 2022, it means that it remained 8,000 Rand up until the 30th of September. So that means 09, 30th of September 2023. Right? So on the 1st of October until 30 September 2023, it was 8,000 Rand. Then on the 1st of October 2023, oh yes, this thing and the zeros is not working today. 2023, up until the 30th of September, that's a 0, not a 1, 2024, it was no longer 8,000 Rand. It was 8,000 Rand. Oh, I don't know what's going on here today. I'm sorry, you guys. 8,000 Rand times by 112 over 100. Because remember, it's 100% of what I paid before the increase of 12%. So 8,000 Rand times 112 over 100. So after that increase, it was 8,960. And the zero worked a little bit better. Okay. Looks like a grade 1 child wrote this. So 8,000 Rand before the annual increase on the 1st of October. So now you need to ask yourself, in my financial year, how long did I have the 8,000 Rand that I was supposed to receive? And then how many months did I receive the 8,960? Your financial year started on the 1st of March 2023. So March, April, May, June, July, August, September. That's where you stop, because then on the 1st of October, the increase kicked in. So for 7 months, you go to rent income. For 7 months, you were supposed to receive 8,000 Rand, right? But obviously 7 months is not a full financial year. Then for October, November, December, Jan, and Feb, so plus 5 months, you had to earn 8,960 Rand. So let's quickly calculate that total there. 5 times 8,960. So in total, you were supposed to receive 100,800. So that is less than what you are currently showing here. And that makes sense because they told you 1 month is received in advance. That's what it should be. So it means that you need to minus 8,960 from what you have there at the moment, because you received that 1 month in advance, so that your SOCI reflects only the 12 months that you should have received. So that's a bit of a more difficult adjustment, only because we didn't give you the increased figure. Plus, yes, we could have just gone and said 8,000 times 112 over 100 and just subtract that 8,960, which we did in the end, because they said it's received 1 month in advance. But it's always good to check, just double check, because what if we received more than the 1 month? So that's why I did do this whole calculation and not just opt for 8,000 times 112 over 100. It's just me and my paranoia always kicking in. Then, number 5, a credit note for goods returned by a debtor has been omitted from the financial records. So, ask yourself, when I now recorded this initial sales transaction, what did I do? For the sales transaction, so for the sale, I said I'm going to debit debtors control because they now owe me. And then I said I'm going to credit sales because I had a new sales transaction. I lost my L. There we go. Then I'm going to say that I know I had to incur an expense in order to have this sale. So I had cost of sales because trading stock left my business. So this was your initial sales transaction. Now they are saying that you issued a credit note. So in other words, you credited this debtor's account because he returned the goods to you. So you need to now basically reverse this transaction. So you are going to debit not the sales, but debtor's allowances. Okay, so remember, we don't go directly in our sales account. We're not allowed to do that. So we go to debtor's allowances. And then we say that this debtor no longer owes us because he now returned the goods, which means that I need to put the stock back into my trading stock. Gosh, there we go. Back into my trading stock because it's no longer cost of sales expense. I have the stock back. I have reversed this sales transaction. The cost of the goods was 4,000 Rand, which means that I need to say 4,000 times 150 divided by 100 to calculate my selling price, and that is 6,000 Rand. Okay, so starting with the first things first, I know that I need to now debit my debtors allowances. Debtors allowances is closed off to sales in the end. So the debit is transferred to sales, meaning I'm going to subtract it from sales, which means that my debtor now no longer owes me the 6,000 Rand. So minus 6,000 Rand, 2 and 3 zeros, right? I also don't have this cost of sales of 4,000 Rand. I don't have that expense anymore. So minus 4,000 for the expense, and add the stock back into trading stock because the debtor returned the goods to you. So plus 4,000 Rand. So there's your debits and your credits. Next up, the physical stock count revealed the following. You had stationery on hand. So remember, the stationery that you see in your pre-adjustment trial balance, the 5,480, that is all the purchases you made. Whether cash or credit, you purchased that stationery. So you haven't yet used all of it. So now you just need to reclassify this as consumable stores on hand. So I'm removing it from my stationery. I'm saying I haven't used that yet. And then I will debit my consumable stores on hand account. Trading stock is 42,690, which means that I now first need to calculate what is my trading stock after taking into account all of the adjustments. So I started with 50,000 minus that sale that I forgot about, plus the debtor that returned the goods. So I am on 45,200. So that is now according to my books after the adjustments. They are saying that I counted only 42,690. Remember, you must always reflect in your financial statements the physical stock that you counted, because that is the accurate figure. Otherwise, I can say I have 200,000 Rands trading stock, but actually I only have 100,000 Rand. So it's part of the accuracy of your financial statements. So you physically have less than what you thought you had. So you have a trading stock deficit. Deficit. Oh my gosh, I'm making it worse. There we go. So you thought that you had 45,200. You actually only have 42,690. So find the difference there. And that's the stock that went missing. That's your expense. You don't have that anymore. Okay. A debtor whose account was previously written off as a bad debt has made a 2,000 Rand payment. This amount has been credited to her account. So remember, what you did previously is you said debit bad debts, credit debtors control. So in other words, your debtors control is on a 0. There's no balance there. You wrote that off. What they're saying now is this debtor decided to make payment and you credited this to her account. So now you owe the creditor money. But that is not the case, because remember, whenever someone who was written off as a bad debt decides to make payment, it means that that is a bad debt recovered. So you now need to debit your debtors control with 2,000 because you need to add back what you incorrectly removed from the account. So debit your debtors control and credit the account bad debts recovered, the income account. Okay, so put it back into debtors control to make it 0 again. So we're now saying, no, sorry, this actually has to go back. And now you're back on a 0 balance. Okay, then a debtor has been declared insolvent. His estate paid 40 cents in the Rand towards his 3,000 Rand account. So his estate already paid it. They've recorded that. We must now just write off the remaining balance as irrecoverable. So we have a bad debt. Okay, so his account was 3,000 Rand. We recovered 40 cents per 1 Rand that he owed us. That means that we have to write off 60 cents for every 1 rand that he owes us. So 3,000 rand times 60 cents. We need to write off 1,800 rand. So your entry for this is debit bad debts. I'm adding on to my bad debts plus 1,800. And then I'm going to credit my debtors control. So this debtors control has quite a lot going on there. Okay, this debtor no longer owes me the amount, so I am crediting debtors control. I'm removing it. Then, almost done. The provision for bad debts must be adjusted to 10% of the outstanding debtors at year end. What this means is that looking at the debtors control that you now have after taking into account all of these adjustments, that debtors control balance, you don't think you are going to be able to collect 10% thereof. That's why your first step is to calculate what is my debtors control balance after all of the adjustments that I have there. So I have the 11,880 credit sale that I forgot to record. I have the 6,000 rand for the debtor that returned goods to me. Then I have the 2,000 rand that I incorrectly credited when I had a bad debt recovered. And I have the 1,800 that I just written off. So my debtors control balance is 28,000 rand at year end after taking into account the adjustments. I don't think I'm going to be able to recover 10% thereof. So times 10. So I foresee that 2,800 rand will not come into my account. That has to be a provision for bad debts. Previously, I already recorded provision for bad debts of 1,950. So I now need to increase this provision to be 2,800. And remember that when we increase the provision, it means that we are increasing the expense. So because we're making a provision for the debt not being collected, if we have to decrease the provision, it goes to the income. Please remember that this account is provision for bad debts adjustment. The adjustment is the movement between the 1 year to the next. Provision for bad debts in itself is the actual 10% or whatever the percentage is that they have linked to their debts. So 2,800 minus, I'm only accounting for the difference, minus 1,950. So 850 rand expense there to get to 2,800. Then the insurance for Feb has not been paid. Not been paid, meaning that I'm currently only showing insurance for 11 months. I'm reporting on a 12-month period, therefore I have an accrued expense. Insurance is calculated at 1.5% of the total cost of fixed assets. The business didn't buy any new assets during the year. So I need to go to my fixed assets. Fixed assets consist of land and buildings plus equipment, right? That's it. That's all that you had. And it says that it is on the total cost. So not the value, not the carrying value, just the cost. That's why I didn't take into account the accumulated depreciation. So I need to go to insurance. Where's my insurance? There's my insurance. Okay. Need to go to my insurance and I have to say I had total fixed assets of 1.7 million. Interest is 1.5, insurance is 1.5% of the total cost. So times 1.5%, so 25,500. So in your SOCI, you won't be concerned with the accrued expense. But if you had to do your SFP, you would have had to calculate 1 month of the insurance. So divide your 25,500 by 12 to see that 2,125 rand is for 1 month. And that is accrued under your trade and other payables. Okay. Second last one. A new loan was obtained on the 1st of September 2023. So remember, your financial year runs from the 1st of March 2023 up until 29 Feb 2024. So somewhere within your financial year, September, October, November, December, Jan, Feb. I can't even count anymore. So 6 months in your current financial year, you had this new loan of 2 million rand. And this new loan incurred interest at 20% per annum. So 20% per annum times 20. But you didn't have this loan for a whole year. Remember, per annum, a year. You only had it for September, October, November, December, Jan, Feb, only for 6 months. So you only incurred interest for 6 out of the 12 months that they are going to add onto your loan. So when you make repayments to this loan, it will include both capital and interest amounts. For your SOCI, you are only concerned with what is the total expense that I had with regards to my interest on loans. So 2 million times 20%, but only for 6 months. So what am I doing here? Times 0.5. So 200,000 is what you should have as an interest expense in your books. So we're going to go to our interest. There's no interest whatsoever. So we're just going to add our interest there. Remember, interest expense in brackets to indicate that you are subtracting the amount. Without brackets, you don't get your marks. And finally, the last one, our creditor charged us C. And that's why I always say, show your calculations in brackets. And then when you are done, then only add your totals. Because here we go. Our creditor charged our 5,520 Rand outstanding account with 5% interest per annum because it has been overdue for 4 months. So we didn't only have this interest on loan, we also had interest on an overdue account. So we owed them 5,520 Rand. That incurred interest at 5% per annum. But our account was only overdue for 4 out of the 12 months. So they can't charge us the full 5%. They can do that, but only for 4 out of the 5 months. Times 4 over 12. So 92 Rand is what they will add to our account. So we are going to debit the expense interest on overdue account, and we will then credit the creditor's control. And that is the SOCI. You will now obviously just calculate your totals because your financial statements are not done with only calculations there. You need to calculate your totals. Minus 6,000. So here we have 12,880. And then for our cost of sales, remember cost of sales goes in brackets, minus 4,000, and that is 854,800 in brackets. Then over here, 102,800 because it's your 100,800 plus your 2,000. Then over here, advertising, minus 33, so 6,900. And then 5480 minus 490. So this is 4990. And then we added some bad debts. 2195. I just want to double check, is this one I'll still correct over here? 490. Yes, okay. Right, so there I have all of my expenses. Then I have to add all of these expenses to get my operating expenses for the month. 2195, 25,500, 590, 12,900, 2510, and 850. Remember that this must be in brackets because this is going to decrease my profit. Then profit or loss before interest expense. That means that I need to take my gross profit, so my sales minus my cost of sales, add to that my other operating income to get my gross operating income. Then I need to subtract my expenses. So I have obviously a operating loss here. And then I add to that my interest income. So I have still an operating or a loss before interest expense. And then I add to that my interest expense. Okay, and that is it. I just quickly want to double check. Yes, if I'm looking at the sales versus cost of sales, it makes sense that I do have a loss there and that I didn't maybe make a typo because that also happens. Yes, okay, so calculations are done correctly. Unfortunately, we have a net loss. That's sucky.